welcome back to the Burundi Group podcast, Behind Closed Doors. It's been a minute since we've been back in this space, but we're really excited to kick off 2022 with our annual State of the Union address. So we've brought back our favorite guest, got the most views and downloads last year. So Conrad Zurini, broker, owner, president of Remax Escarpment. Thanks for coming back.
Oh, glad to be here. Awesome.
For those of you guys who didn't hear Conrad's annual outlook last year, or you're not familiar, Conrad's a bit of a stats guru. Being the head of our company, he gets to speak to a lot of agents and consumers, so he brings a lot of insight. So hopefully you're going to walk away with this with a little bit more insight into what to expect for 2022's housing market. And the reason we're doing it now at the end of January, we think it's really important to kind of get a lay of the land, kick off the year, see what the first 30 days bring to kind of give us an idea of where we're going to go from here. So, Conrad, what have you seen in the past 30 days of the market?
Well, besides an inventory shortage, right, that we're seeing. You know, what's interesting about this year compared to last year, and I did review what we talked about last year. Last year was a lot of uncertainty. We were just finishing off, COVID was just new. This year, there's a lot of factors, I think, that are coming into play, much more than ever before than we've ever had to deal with. I think last year we were almost resigning to the fact that, people were going to go back to their offices and probably by the summer or the fall or something like that. But that changed at the end of 2021. Yep. And as we all know, another lockdown. So now I think companies have now said, hey, we're going to shift what we're doing. So it will be a hybrid situation. So last year we thought people would go back to the offices. This year, not go back to the offices. Okay. Last year there was no talk of interest rates.
You're right, yep.
Right? This year there is talk of interest rates. Last year we had a pretty decent inventory. This year we don't have the inventory. And I would say foreign buyers was always in the news, but again now they're the enemy number one. So they've come to the forefront. It looks like there's going to be more government intervention. So there's been a lot of uncertainty, and I think we've had two factors in January. And I'm glad we're doing it at the end of January because you start to see some trends. The weather, we had terrible weather. We were under lockdown, so a lot of consumers were saying, if I was going to sell my home right now, where do I go? Do I go to, I can't even go away for the weekend and bear the 80 or 90 showings that are going to occur on my property. So none of that, couldn't go to restaurants or anything like that to kind of get away to shield themselves from this rapid amount of showings. Demand is still quite high. So last year at this time, it was probably about like 18, 19 showings per sale. We hit as high as 34 to 35 showings per sale on average. So again, still a lot of demand, but also that inventory piece is low.
Inventory is tight. And January 2020 did start out really low in inventory as well. If you can imagine that we're even less than we had last year. I remember calling clients and saying, guys, I know you wanted to sell in the spring, but you got to get to market now. Like there is just nothing for sale. So the fact that we're even lower than last year, when we had 3 houses to show a client and say, Stony Creek, there is literally 1 house for sale and everybody is jumping back in.
Yeah. Usually December, you get a lot of unsold inventory. December 2021, there was still a buying frenzy, so we didn't see that inventory. And a lot of people say, you know what, I'm going to take my home off the market during the holidays and then put it back in January. They ended up selling their properties, and there was offers happening 24th of December. So really, that whole holiday break and inventory not selling didn't even exist this year. So we went into January with no inventory. Then we got hit with some erratic weather. So and then people they're sitting on the sidelines and wondering what's going to happen with interest rates and things like that. But we've seen huge gains in terms of average price.
Yeah, let's dive into that a little bit, because even like you're saying, with houses that we saw sell, and we're not talking huge gains over a 6-month period. We're seeing, like in the last 30 days, homes that sold in November at a comparable sale of, let's say, $730,000 are hitting $930,000. Like we're seeing $200,000 jumps in a very short amount of time, right?
Yeah, well, Toronto saw a 7% increase since December, and I think we're closer to 9% increase. this year.
In a single month,
In a single month, yeah. I've always felt that we were going to see the biggest amount of increase this time around in Q1.
Okay.
And probably level off as we got through the year. But again, it's all contingent on inventory. And like I said, people are sitting on the sidelines. You're right. This is probably the lowest inventory we've ever seen. And it shows because the amount of sales is down. So January sales, I'll just go quickly through them all. Some markets, Hamilton as a whole was down about 17% in unit sales for January over last year. Average price was up to 35%. And the other thing is when you take in the whole board, Hamilton, Burlington, the average price is over $1 million, which is a milestone. We've never seen that before. As a matter of fact, between 2020 and 2021, over $1 million properties was up 300%. So that's substantial. Now, $1 million.
How many houses are now entering this market? Like $1 million is now becoming the standard for a single-family house.
And the great story now, if you really want to laugh, look at what you could get for $1 million 10 years ago.
Oh, gosh.
It was pretty. it was waterfront. It was pretty substantial. It was, and now you're looking at an end-unit townhouse. So again, this is a real supply issue that we have all the way through. Yep. From new homes to resales. Hamilton West was a real standout. They were down almost 50% in unit sales, up about 30% in average price. So again, very interesting there because usually that market is fueled by students and things like that. Not a lot of inventory coming on. Rental is the investment, like a rental housing is the investment vehicle of the day. Rentals are rising at a rapid rate, so probably people are holding on to that product. Now, I will say something about investors.
Sure.
Just quickly, and I'll just kind of divert it. If there's any type of what we call like demand regulation, so if the government intervenes from a actual demand perspective. What I mean by that is they either alter, mortgage, like your down payment, say for investors, like 35% or something along that line. If it goes up to 35%, that's a demand side regulation from the government. That will affect investors. So some of these investors are probably sitting on the sidelines waiting to see what government regulations. They will be the first ones to respond to that demand side 100%. Now, we need supply.
Yeah.
Supply side regulation, again, I don't know what that would look like, to be honest with you. It is interest rates. Interest rates could be considered a supply side thing because it's less of, it costs people less money to build to actually buy a home. But again, until we see more inventory coming to market, it's going to be very difficult for anybody to do any regulation on the supply side.
It's not even a regulation. We have to create more supply, right? Which, if we're not going to expand the urban boundary, how else do we create this, right? It's funny because we start to look to other markets. I'm not shy that I've been looking in the U.S. at properties, and they've done some things there to give sellers more comfort in going to market. Things like leasing a house back after closing, to be able to give them cash in hand and give them time to go find something. So their market is very much put your house on the market, sell first before you buy, which is very inverted to the way we do it here. So some of those things, I wouldn't be surprised if we start to look for trends that give a seller confidence, because everybody right now says, yes, I can sell and make a lot of money, but where do I go, or how long will it take to find something? So when you sell, you still have a place to go and you have the cash in hand, you become a very strong buyer. I think that things like that could bring more houses to market.
Laneway housing, laneway housing, and then the regulations, the actual lifting the urban boundary. And Hamilton's really restricted themselves. Where other municipalities around Ontario are looking at 2051 numbers, like population growth numbers, Hamilton decided to stay with the 2031 population numbers. So the outskirts is again going to benefit from that new building, that new growth. So again, it would be, we have to end NIMBYism, not in my backyard. That would be some sort of a supply side regulation that governments would impose densities rather than it would be decided through through politicians and public meetings and things like that. So again, you might start to see some of that supply side, but that's a longer process. So they're going to really attack the demand side without a doubt. Now, another interesting market is Grimsby, down about 20% in unit sales, up 40%
we've seen
in average price.
Record-breaking prices in Grimsby.
We talked about that too numerous times.
It's hard to say. You keep saying record-setting price, but we really are seeing huge gains in markets like that for that especially for the single-family house. I think in markets like Grimsby, Ancaster, Burlington, Detached are doing extremely well. And I don't think it's pandemic-related in the sense that we want to get away from neighbors or anything like that, but I think that move-up market is starting to get some comfort level because townhouses have performed really well. It's giving them some more buying power for sure.
And one of I call it the bellwether market, and it has to be Ancaster. So whenever we go through something dramatic in terms of, I would say like in the late 80s, I don't know, maybe some of the listeners or people watching this don't remember, but late 80s, we had another rise in prices. Again, restricted supply, prices increased. We had a huge demand. Baby boomers are buying homes. But then what happened was, after that was all done, the market that really got hit the worst in our Hamilton Wentworth area was Ancaster. Ancaster started to see prices, people were volatile. They had big mortgages, they were higher end homes. So that's where you started to see people, some of the volatility in the market. Now it's interesting now that Ancaster is probably the least highest increase in pricing at 23%. Which is interesting. Down 23% approximately in sales, but they're at 23%. They're even below the average of the city overall, like quite significantly. Like almost we're talking 12% below, which is kind of thing. So Ancaster's your bellwether. Maybe things are leveling off. It'll start there because I think it hits people there because they're bigger mortgages and they're just a little bit more sensitive to interest rates and they're sensitive to inflation and what it costs to operate your home on a daily basis, which is interesting there. And Burlington down 22% and it's up 40% in average price. Now, you got to remember, the average price of Ancaster, that's a wealth market. You don't have a lot of lower end product where you would have some more lower end and more condos in Burlington, but the average price is about equal at 1.3, I think it's $10,000 apart. Ancaster's 1.3 million, 59,000, and Ancaster's 1.3, 69,000. Burlington rather is that. So again, we've never seen
to see those markets kind of level out as we've always said Ancaster was Hamilton's wealth market, but it was always lagging behind Burlington. So to see them kind of
come
level
together,
out.
And I think too, the other thing, another big factor, and this, if you guys can remember, there's a few factors that we talked about already to remember this year and keep an eye on it. And someone like Alex is always looking at these numbers. Another one, I would say the number 3 factor to look at would definitely be now I lost my thought.
HPI?
No. I wanted to talk about what did you just mention? You just mentioned.
I just said wealth markets, like the luxury markets.
So, the one I want to talk about is condos.
Oh, okay.
Because I want to switch because it's interesting because you have to understand Burlington's got a wide tenure of product. Semis, townhouses, condos, where Ancaster doesn't have that condo market. Condos have increased the most rapid over the last month. Toronto saw the biggest increase was in condos. You got to remember too, condos downtown Toronto during the pandemic. There was a huge exodus outside the city. They didn't appreciate as much as single family, like you mentioned. Like Ancaster markets, like Ancaster, ratcheted up a lot of single family stuff on the ground. Now Burlington, you've seen some crazy condo sales. We're talking
luxury condos. Really, we're not talking like small, downtown Toronto, 400 square feet. We're talking about, we're seeing $2-3 million sale demand of condos. And
I think you saw something like almost like $100 a square foot from month to month.
Oh yeah.
So it's significant. So yes, Burlington is now that you got that that condo market's pushing, it's going to push that pricing, because usually it would never have been that close in terms of the
You're
pricing.
right, and if you probably looked at the detached, like we start to see this frenzy of buying where, we have this, and it's one of the things I hate that realtors do the most. Oh, we got, 200% of asking, or, hundreds of thousands over asking, because it's a pricing strategy in this market. But I do find that kind of levels off as we cross kind of the $1.6 million range to $2 million. Then it starts to become, just a regular price point that you negotiate. We don't do that, 300,000 under asking at 1.7 million. So you're right, in Ancaster, where we do see a lot of that inventory of that single detached falling in that price point, we're not seeing that demand that's pushing those prices, beyond that level. Whereas in Burlington, when you do get that lower price point,
Ancaster's a pull,
yeah,
and Burlington is definitely a push. And keep an eye on that condo market, because that's an entry level, and that's where you're going to see a lot of appreciation going forward. I would say the next 6 months, definitely, without a doubt.
Okay.
Without a doubt. Yeah.
So how do you think buyers really should attack this market? Like, I know I've been working with, I could give you a couple examples of couples that I've been working with to find a single detached home. And we've actively been looking for 2 years. They're not sitting on the sidelines. We are actively looking. And like you said, 2 years ago, if you looked at $1 million, which is what their budget is today, $1 million, $1.2 million, that was a healthy budget. We were talking 3,000 square feet and 4-bedroom homes in Ancaster, Dundas.
Tons of value. Like
now,
lots of value.
Like, I think both of them have had to readjust now what they want, because their budget of $1 million to $1.2 million doesn't afford that anymore. And now they're like, well, Alex, I know we wanted 4 bedrooms. We have to scale back to 3 bedrooms. Like, is this worth the move now? Like, what would be your advice to buyers in this market? Like, they said, is this the peak? Should we continue to wait? Or, you know what, guys, you're going to have to make some sacrifices and jump in, because this is going to continue to carry. And you're not going to be priced out of the market. How do you?
Well, like, you're right. When you see that $1 million home becoming the average, that's really going to be an issue. We've got probably about 40 some odd percent of non-area buyers, so GTA buyers coming here. They used to be they were a value conscious consumer. They would come here, they'd find these they live in a condo, and they look at these bigger homes, probably go up a little bit more in their mortgage, or maybe even do a lateral, like from a dollar value, a condo downtown, and buy a detached in Stony Creek and Bimbrook and stuff like that. So they were very value conscious. Now they are price conscious, and that's a whole different animal. So advice to those type of people is maybe you start to look at something a little higher. I think if you get out of that 1 million, that really where the scrum is, yes, you kind of move that up. And again, I know that's tougher than it's easier said than done, but a lot of parents are getting involved in the market and helping out their kids and things like that. It's right on the minds of consumers. There was just a recent study the other day. Believe it or not, affordability. It was number one was COVID when they surveyed Canadians. Number one was COVID. Number two was healthcare, and number three was affordable housing. Never have we seen housing in the top three ever. There was always some other issue, but that was on the minds of Canadians. So that's a big part of it. So I think you got to look at your parents and things like that. But you mentioned before when I kind of lost my mark, my bearing there. The HPI, it's a great tool. It shows trends, it shows pockets, it shows things leveling off. Like I said, Ancaster seems to be not appreciating as quickly as other areas. Maybe there are types of properties in Ancaster now that have kind of leveled off and are not appreciating as well.
And that could be an opportunity for somebody, or
huge opportunity. It goes neighborhood to neighborhood, and I think you got to be really watching that HPI. And I think, I think this is something that if I was really active, I would be probably on a monthly basis alerting people to that HPI. Yeah. Tell them how to read it, understand it, what's happening in some of the trends, because you can find this gap in the market where things have begun to level off, and that's the time to enter. You don't want to buy that type of product when it's going higher. And maybe they have to say to themselves, maybe we buy a condo, okay? Like, I'll tell you something. If back in the summer people were thinking buying a condo, and then now you see all the appreciation of condos, they probably could have been in a home by this fall, by fall 2022, with the equity. And it's what Alex said before, we've never seen more, if you want to call it in-season buying and selling, people buying 6, 7, 8, 9 months ago, or within the same 12-month period buying and selling. We've never seen that. Yeah. A useful strategy would have been those condos that were kind of lagging. If the HPI showed condos lagging in Burlington.
Yeah.
We have a very good friend of ours. We had the conversation. Sold a condo in Burlington, and then another friend of ours sold about 2 months later. Completely different price per square foot. Yeah. Again, you got to watch those trends, watch those numbers. Look, it's really a numbers situation here, and I think if you got to monitor those numbers, monitor growth, things are leveling off, and find those kind of opportunities.
Yeah. Don't be annoyed by your realtor that's reaching out to you month to month to give you an update on the market, because it really does change, and it's not a blanket like the entire market is doing well. Like you just said, if Ancaster's starting to level off, then maybe this is a call to Ancaster sellers. Guys, maybe this is the time where you've maximized your growth or the value of your house, and it's time to cash out now. That's maybe not true of other markets, like maybe Binbrook is still growing, so those guys want to hang on a little longer, but Ancaster, if you're starting to peak and we're starting to see a level off, now's the time to jump out, right? So really dive into each area as an individual market.
And the type of product. So the HPI could look at, it does 2-story, it does 1-story, it does apartment style, so maybe you have to juggle it. Look, people in Vancouver have had to buy condos, 6-7 condos before they could get into a detached. Yes. I think it's very interesting. I had a conversation the other day in business, that whole conversation about culture eats strategy for lunch. But I will say this, because of COVID, we couldn't. Culture was missing. It was missing. Companies, we weren't here. We were isolated and all that. And it was really strategy that really drove it. So if I talk about homeowners and apply the same principles, this is not a culture meaning like I would need a 2-story, or I need this, I need that. No, this is something where you want to get in the market and be very, very strategic. It's neighborhoods, and it's also the type of product you're looking at buying, because that moves up and down quite relatively on a constant basis.
And I think for first-time buyers, and I have my assistant's a first-time buyer living at home with her parents trying to save money. I was buying an Apple Watch the other day, and I got into a conversation about real estate with the little guy that was helping me, who was great, by the way, so shout out to Apple at Mapleview Mall. But they both have expressed their concerns about being young buyers in the market and saying, what do? I feel like I'm staying at home and I'm saving. I'm never going to be able to buy a house, right? And like you said, I think you've got to adjust your perspective on it. And you're right, your first place may not be a house. It may be a condo, and you might be into 1, 2, or 3 condos before you get to a house. So you have to accept what's changing. But I've given them both the same advice and said, guys, don't sit out of the market while you save, waiting to buy a house. You're going to get priced out. You're not going to be able to save as much money as quickly as the market is appreciating. You'll get lapped. So I said to both of them, look, get into the market in an investor, capacity if you can. Look at markets like, that are still, cheaper than say Hamilton. Look at Fort Erie, look at areas of St. Catharines, and buy a rental property. If you don't want to live there, that's fine. But buy something that's going to appreciate, so that when you are ready to move out, you have something that has grown along with whatever you've continued to save. Maybe you're lucky enough and it continues to make money. If you rent it, maybe you make more than the carrying costs. But get a foot into the market anywhere. I don't care where it is.
Co-ownership, even though
don't go to somewhere you can't manage. Like, don't go too far. Get in with a friend. You and a friend buy an investment property. It's a great thing. I've had great clients that have done that. Bought a property together, and then they both sold and bought separately and had that nest egg. So don't wait. Get into the market. I don't think sitting on the sidelines waiting for this to crash is going to be the answer.
It's interesting because everybody says, well, this interest rates are going to shake the tree.
Let's talk interest rates.
Well, let's talk, and we'll probably see the overnight rate, everybody's talking about it's going up about 300%. Well, you got to remember, it's a quarter point. So right now, the overnight rate. So we'll probably see something shy of 2% probably come summertime. I think it'll probably level off in the summer. You got a couple of factors here. And we've got a provincial election in Ontario, June 2nd. A lot of people's mortgages get renewed in June. So it's probably will level. I believe it will level off in the summer. I don't think they want to scare people that are renewing their mortgages with too much of a jump. So they'll probably do a couple of them prior, level it off. It'll probably level off. You might see something in the fall, but I believe we're going to see a period of a couple of increases and then a leveling off effect. Now, what happens with that is this is the interesting factor. Every time something like that, interest rates, stress test whatever it might be, okay, 11% of the market get out. The minute they start seeing that happen, that uncertainty, where's it all going to go? They pull out. The funny thing is, like after 2 years, 14% come back in. Yeah. So you may lose 11. So then we're still back at that whole supply piece.
It's always a temporary, while the market, like they want to see if the
tiny
market settles
lull.
out.
Yeah, and
talk about interest rates, because everybody, and I've seen a lot of realtors that as soon as the interest rate, well, we didn't increase it, but another one is coming, and then they blast it all over social media. And I have every buyer, seller calling me, Alex, interest rate hikes, is that going to change the market? Is there going to be a rush of demand now? I said, guys, talk to your mortgage specialist, okay? An interest rate hike doesn't mean all mortgage rates hike. There's fixed, there's variable. So right now it sounds like variable and fixed, which are usually within 1% of each other, are extremely far apart. I think they're about 3%,
Yep.
I'm sure my mortgage guys are watching and they'll correct me later, but they're about 3% apart. So the government really wants to creep that up and get them to come together. So we're going to see variable interest rates increase, I think, more significantly than fixed. So that impacts very different buyers. I mean, variable interest rates tend to be a more risky purchaser, an investor, somebody who's self-employed, maybe commission-based, who has a kind of floating income where if their mortgage payment changes by $10 or $20 in a month, it's not going to change their life. So they can handle those ebbs and flows. So those guys, I think the investor class may be more affected than, say, somebody who's on a fixed income and needs to stick to the same payment every month. Their fixed rate maybe will not change. So they're not necessarily the ones rushing into the market. So I think you're going to have to pay attention, again, to things like this and just don't assume.
Absolutely. But it's a perception. Yeah, you can't assume it, but there's that perception, and there are people that are ill-informed that will sit out the market. We lose about, like I said, 10 to 11% people just completely pull out. But what happens there is we've got such a rush of demand. I don't think anybody would notice, that'd be, let's say, like I said before, 35 showings per house. Well, we'll be down to 31, 29. So it's not going to really affect the market that dramatically.
No. So what do you think if we only look at, and we only like to predict things quarter by quarter. I think if you try and predict the whole year, I mean, you have a better chance of picking lottery numbers at this point. So so let's finish out Q1. What do we think is going to happen in the next 60 to 90 days in the market? Are we going to continue to see an inventory shortage? I know I've talked to my photographer, and they're extremely busy, which is usually a good sign. That means we've got some inventory coming down the pipe. What do you think we're in?
We're seeing, I think you could see a explosion of inventory coming, and yes, and I've talked to agents, and they've been stockpiling them. I think people are waiting for this lockdown to be kind of over with, and seeing capacity levels and getting out there. I think a lot of employees are trying to figure out what their companies are doing. Again, there's a huge shift now. They're talking about maybe a smaller hub, like let's say a downtown Toronto smaller hub with more regional offices. I watch the regional office market. There is nothing out there. That's a great indicator. Yeah. If there's no inventory in office space, like in the outskirts, that means that companies are actually doing what the strategy that I'm talking about today. So that would change. That would mean that there wouldn't be a whole rush back to Toronto. But they are saying that the Toronto condo market going up the way it is, they feel there is this sense of people coming back to that market as well, because again, it was much lower than the smaller on the ground detached. The increases were smaller. It was really affordable. So we are seeing those trends. So you have to look at those office trends as well. See what's going on in the office market as well. But then you made another point that you wanted. There's another point that you talked about.
I think it comes down to the inventory is going to come back too, like we said.
And we're seeing, and that's the other point. We've been watching. We've had a 10% increase in listings for the last 3 weeks, every week over week. So that's also a great sign that we're seeing more and more inventory coming to the market.
Which is going to be good for buyers, and I think sellers have to be a little cautious. We ran into this last year, and everybody's asking me when we see these big sales, record-breaking sales, Alex, is this the new normal? And can I get that for my house? I said, well, you guys, you know what? You have to watch, because there are some that are one-offs, and then you'll see a couple more houses come to market, and then they kind of sell here, not hugely dramatic, but slightly less than that one. And then there's other ones where you start to see 1, 2, 3, 4. Okay, so now we've set a benchmark, like townhouses. The first townhouse we saw in Binbrook that sold for $950. We didn't know, is that a one-off or is that a standard? And then we started to see 950, 975. Okay, now we've got a new benchmark. So I think you can start to rely on that. Like when we do evaluations for people, they're always worried, like, well, Alex, why aren't you giving us that giant price? I said, because I can't get you to rely on that. We need to build more consistency in the market. And when we see more inventory come in, that's going to spread buyers out. So you're not going to see 40 and 50 offers on one property. Creating those huge numbers.
And that's another trend that we're seeing. We're not seeing that as many people in the market, like that many offers. I've had agents say we had no offers and we only got one, or we just got two instead of like 10
72 showings. We got two offers.
So
we're spreading the buyers out a little bit.
That's an interesting thing. More inventory is coming. And there's something that's a terrible factor, but I have had conversations with agents that are saying the people aren't bringing the deposit and they're pulling out of the deal. And I'm going to tell you something. I got a good feeling that something else came on the market and they went for that other product rather than fulfilling their obligation on the original one, which is that's a black eye on the industry, and realtors really have to really train their buyers. That's something that that's a very negative thing to the market, and it really brings a lot of uncertainty to sellers in such a way.
Well, it's something to explain to clients. It's maybe in a market that's this hot, you think, oh, I just picked the highest price. There's more to our job at that point. I think when you have all the offers at the table, it's not just picking the highest price. It's really, drilling down into who the buyers are. What is their seriousness, their financial ability? Do they have the deposit, in hand, ready to go? Like, show that commitment to me, because I don't want to be the one that, we pick the offer, the deposit doesn't come in. That's a failure as me on the listing agent side. I didn't do enough due diligence with all of the buyers. So I think these are questions, if you're a consumer watching this, these are things that if your realtor's not bringing it up, I want you to make sure you're bringing it up. What are we doing to ensure we're picking the best horse that's going to cross the finish line, right?
And on the buyer, if you happen to be one of and a lot of times it's coming down to 3 top offers right now currently. If you're one of those top 3 offers that listing agent is talking to you about that, and unfortunately you don't get it, well, I would be talking to my buyer rep doing a backup offer, because I think that's really, really critical. Now is the time to do a backup offer, because we're seeing that little bit of shakiness, more inventory comes, consumer behavior. We're starting to see that trend, so this is the time to do that as well. The other big number too, and again, we had the unemployment rates numbers came out for January. They were low, the employment rates, right? So a lot lower, again, because of shutdown, and again, it was because of gyms and restaurants and things like that. I'll tell you, that's a number that the Bank of Canada looks at a lot. If we see that again in February, then we might have a chance that they might be less rate increases, and they might push that rate increase a little bit further. Having said that, that's going to really fuel the market again, and that momentum and stuff like that. But there is uncertainty. There are people sitting on the sidelines to this day, but I think people want to capture those great rates that we have today, these record-breaking rates.
Numbers.
So that employment number is the thing. And there was another great little stat that came out that 48% of Canadians that work in offices miss their office. They're missing their office.
They want to go back.
They want to go back. So again, employers and companies have to really look at that trend and where that's all going, and how that's going to impact the market. Again, what we talked about, the shift back to the GTA. Right? So that kind of thing.
Okay. So I think that's good. Conrad, if I had to leave you, we had to leave the consumers here that are watching with some advice, it could be for sellers or for buyers, how to navigate the next 90 days, what should they do? Sit on the sidelines, jump in, anything you want to give them for how to navigate the next 90 days in the real estate market?
Well, I think this is a time for analysis. I think this is, but not, again, we don't want analysis paralysis, but I think this is really time to analyze, look at some of the trends, like we talked about, different, maybe re-look at what you're buying. Maybe you go to a condo, instead. Maybe we pull a step back and get into the market. The supply issue is not going away for a very long time.
We're not fixing the housing market.
No, it's not. We're
not
short.
balance it out.
Ontario's short something like 40,000 units. They've got a lot of ideas, tiny homes, this, that, the other. But again, before this really kind of gets moving, it's going to take a long time. It moves in what I like to think archaeological time. So that stuff will take a little bit of time. So if anybody's looking at some of that on the horizon, it's not going to happen. Even new builds, a lot of builders are a little bit shaky right now. Costs of labor has gone up. They just did a study, everything. They did a study of the developers in Canada. There's a 31% increase in costs associated with getting that unit, that product to market. So that's a big factor. Again, I would be very strategic. Look at pockets. Look at some opportunities. Look at some volatility in the market. Maybe I'm hoping that investors get a little bit rattled in the next little while. We might see some changes there, 35% down. There might be an opportunity to buy, those kind of maybe illegal/legal duplexes. Keep an eye on that. That's living in there and renting and what have you. I think that's going to be a pocket or an opening in the market where people can get right in there, because they'll get shaky, like you said, they'll get nervous and want to sell. But again, look at the type of product, be strategic, follow the numbers, look at the trends. There's a lot of numbers, there's a lot of factors now. Like we mentioned 5 or 6 that are really going to affect the market. They're
showing that we're going to stay on this upward trajectory
100%.
for at least the next 6 months to a year. Beyond that, I don't like to predict, because anything can happen. Like I said, there's rule changes and all kinds of stuff that can happen. But I think at least that long, we're going to see some serious appreciation continue.
Completely. And what's interesting too is that you talk to people that say, oh my God, there's a bubble or whatever. And it's funny, I'll tell you this much. There has not been a mention of bubble. I Google the word bubble and all that kind of stuff. It used to be high on Google AdWords and trends. It is no longer there, because I think people finally figured out this, economics 101, the supply and demand piece, that it's not a factor anymore in terms of a bubble. But I will say this, to the people that say it's a bubble, right? So at the end of the day, I buy today, right? If I buy something today, and let's say it's 10% higher than it was in December. Well, let's say prices drop 20%. Well, then where am I at? I'm at maybe September or August of 2021.
We're not going to go back to 2015 pricing here.
No, it's not going to, it just can't. So let's be realistic about this. And Alex is right, get into the market, get an agent, get somebody that knows the numbers, that's keeping an eye on things, okay? And really be strategic. Again, if you're on a buy side, guns a-blazing, deposits, have the deposit, have your story about who you are. People that own a home for a long time are really about that emotional piece.
You're right. Like I said, I was talking to the girl that does my nails the other day, and she's been in multiple competition situations and lost by small amounts, 5,000, 2,000. And she said, we've never got a second round. And I had to say, what are you or your agent doing to make sure you're continually in that conversation? I know you don't want to, I don't want to write a letter because I'm not a lovey-dovey person. It's not about, flattering the seller on their home. I mean, you can if there are features you love about it, but I think it's telling your story. I'm an independent business owner. I've been, financially strong throughout the pandemic. We have stable jobs, we have savings, we have family to rely on. Those are things that, again, as a listing agent or as a seller, I want to hear when I'm picking the horse. When we just get an offer sent into our email with no conversation to that agent, I have no idea who their buyer is, what their financing situation is, you're absolutely right. I will give them zero consideration. Because I have no faith in them. So again, if your agent's not advocating for you, that's a whole other conversation we can have, but be your own advocate and make sure you're using all of the tools in your toolbox to keep yourself at the table, because I promise you, if you don't get this house, the next one is not going to be cheaper. So at some point, you have to buy in because the next one is going to be more expensive, and eventually you're going to be out of the market if you can't compete.
Completely. And don't be shy about your financial bravado kind of thing. Don't be shy. Put everything on the table. I think that's one element that's gonna win the day. And you talked about some of the things about the homeowner staying in longer. So if you're a first-time buyer and you're renting, and the closing date's an issue, there's some really cool things that the seller could stay there for a month or 2 or 3, and we've seen that trend in the U.S. That's happening all over the U.S. as well. There's some tools in the toolbox. I think you can have some great success. There's a lot of inventory that's been pent up and it's coming. So I think the first quarter you'll be able to navigate quite well.
Awesome. So if there's anything we missed that you guys still want to know about the housing market or what to expect in 2022, don't ever hesitate to drop us a line at Burundi Group on Instagram or info@burundigroup.com. We'll happily bring that in the next podcast, or we'll bring in a different guest on a different take. But Conrad, thank you as always. Really,
pleasure.
really great
Awesome.
insight.
Awesome talking about
and
the industry.
thanks for tuning in, and we'll see you guys soon. Take care.
Thanks.